Hey everybody, it's David McCree, CPA here. Today we're going to talk about a really important topic related to the Form 990N, and we're going to talk about what happens if a nonprofit submits the Form 990N, the electronic postcard, when it really was not eligible to do so. In other words, it had too much income, too much gross receipts, and it should have filed either a 990EZ or a 990N, or 990 full Form 990. So before we get into that, why would this happen? Okay, well, there's usually two reasons. The first reason is the organization maybe doesn't really understand how to calculate gross receipts, and it underestimates its gross receipts. Maybe it forgets to count like that non-cash stock donation that it got. So that's one situation. The other one is maybe the organization kind of runs into the deadline and realizes, oh gosh, we don't really have the records together to file the 990EZ, so don't worry about it. We'll just file the 990N, and then next year we'll file the right return, and then same thing happens again the next year, and this is fairly common. So what happens then? What's the ramifications? Well, if you submit the 990N when you should have filed a EZ or a 990, you don't meet your filing requirement. Okay, you have not met your file. 990N does not meet the filing requirement of a 990EZ. And if you continue this practice for 3 consecutive years, then your tax exempt status is automatically revoked. Okay, and so you can see where that's an issue. Now, how's the IRS going to know? Well, the truth is, a lot of times it doesn't. I mean, a lot of organizations get away with this for quite a while. Here's the important thing to understand, okay, that the IRS does not actually revoke an organization's tax-exempt status, okay? The language that they use makes it sound like they do, but they really don't. It's the law. Section 6033J is what revokes tax-exempt status. It's what we call revoked by operation of law. In other words, the IRS doesn't even have to know. The IRS doesn't have to be involved. If you haven't met your filing requirement for 3 consecutive years, the organization is revoked, period, even if the IRS doesn't know about it. Typically, what the IRS does is somehow it discovers that you haven't filed for 3 consecutive years. It discovers that you're in revoked status, and it publicizes that, right? It puts it on their website. It puts you on their list of revoked organizations. Okay, that's an important concept to understand. It may not seem that way, but it really is. So, how can the IRS find out, right? Well, the IRS has come up with what they call a compliance strategy. Okay, it's really pretty simple. They look at other documents that are related to your organization. So, for instance, if you have employees and you're issuing W-2s, and the W-2s add up to close to $50,000, the IRS is going to look at that and say, "Oh, look, if they're paying their employees almost $50,000, they must have more than $50,000 in income," and they'll open an examination, right, an audit. Okay, same thing if you're issuing 1099s to independent contractors. Right, they'll look at that and see how much you're paying your contractors. Or if a payment processor issues you a 1099-K saying that, hey, we've processed $60,000 in payments to your organization over the year, the IRS is going to see that and say, oh, looks like they should have filed a 990EZ, and they may open an audit. Okay, the other way they can find out is from snitches, right? Competitors, disgruntled former board members or disgruntled former volunteers, some of your relatives, bloggers, investigative reporters, bookkeepers, whatever, all kinds of people could tip off the IRS. Now, what if the IRS discovers that an ineligible organization has submitted a 990N for 2 consecutive years and not 3? So, what if you we know that if you fail to meet your filing requirement for 3 consecutive years, you're revoked. Well, what happens if you just met it for 2? Okay, and then the IRS discovers, hey, you haven't met your filing requirement for 2 years. Well, they can make a written demand. They can say, hey, you haven't filed. You need to send us a return, or you should have filed a 990 EZ. Okay, our compliance strategy has produced evidence that says you should file a 990 EZ, or they can file a return themselves. That's what's called a substitute for return. And they do this a lot with with 1040s. I have not actually seen them do it, the IRS do it with a substitute for return for a 990 EZ, but they can do it. More likely they're just going to demand that you file the return by a certain date or else. Now, isn't there a law that says the IRS has to notify an organization that if the IRS has not received a filing for 2 consecutive years, that they have to give the organization a written notice that the revocation is upcoming if they fail to file for that 3rd year? And yes, there is. What happened was, when the IRS made this 3 strikes you're out rule, you failed to file for 3 consecutive years, a lot of organizations were caught by surprise. Okay, they didn't realize that this was a new thing. And so there were a lot of small organizations, really good organizations, that got revoked. And Congress sort of stepped in and said, hey, we got to give them some notice. We got to let them know, that, hey, we haven't received a return from you in 2 years. If you don't file this year coming up, you're going to be revoked. And that was helpful. But in this case, it doesn't prevent the IRS it doesn't prevent you from being revoked. Okay, because the only way that the IRS is going to know to send you this notice is if you haven't filed anything at all. You haven't even filed a 990N. The IRS is going to see that, and they'll send you a notice that says, hey, we don't have any record of you filing. 3rd year's coming up, you need to file. If you've been filing a 990N, as far as they know, you've probably met your filing requirements. So they're not going to send out a notice and let you know. So if you didn't actually receive a notice from the IRS warning you about an upcoming revocation, can you still be revoked? And the answer is absolutely yes. Okay, and there's actually a Chief Counsel memorandum from the IRS that discusses this, and they say, and this is kind of legalese here, the statutory text of the section does not contain automatic revocation, does not condition automatic revocation upon the service's issuance or the organization's receipt of the notification described in the section. So in other words, translation is, if the IRS can still notify the organization that it's in revoked status, even if no notification was sent. Right? You can still be revoked. Right? If you haven't met your filing requirement, by operation of law, you're revoked. And the IRS, even though they haven't sent you a notice, they can say you're revoked. Yeah. So the takeaway from this is carefully consider whether your organization is eligible to submit the Form 990N. If it's not eligible to do the 990N, then you need to submit the correct form. Okay, very important. Here's another little tidbit. The IRS has some jargon. They like to use a lot of codes. And the IRS documentation often refers to revoked status as status 97. Okay, so like they'll say, well, your organization is in status 97. That means the organization is in revoked status. And it's best to avoid that. One of the reasons it's a good idea to avoid it is, even though there are procedures to be reinstated, it can take a long time, and it can be a hassle and expensive. Okay, so get those 990 N's or 990 EZs or 990s filed correctly. Okay. Good luck.